All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. If we go out and we take a look at different ways to analyze the market, there are infinite ways, right? There are absolutely infinite ways to take a look at it. But as we go forward and you start to see the stocks on my watch list and the different things that I look at on a daily basis, you're going to see about 12 of them, right? And they're not all meant to be, buy sell triggers or anything like that, but more of an understanding of the framework for the stock. And there are three things that, three of these that I want to take a look at here today. We will talk about the other 9 as we go forward. But the three that, I want to talk about here today are average true range, 3/7 stochastics, and point and figure. And let's just take a stock. Let's just take Micron for kicks and giggles here. And we'll go take a look at these factors when it comes to Micron. Now, average true range is a very simple indicator with a very simple implication, okay? And I here just have this on a 14-day, right? But it's the same indicator, same implications on a 28-day and other type of ranges here. But the bottom line with the average true range is when the average true range is on the decline, the stock tends to rise. Now, one of the reasons I'm looking at Micron is because I want to show you that it's not an always scenario, right? It's not an always scenario. But when the average true range declines, like right back here in May, the stock price tends to go up. When the stock price falls, the average true range tends to go up. Why? Well, because when stocks go into bearish modes, the volatility tends to be bigger, the pace of movement tends to be stronger, and so the range on that stock on any given day tends to be significantly greater. So when average true ranges are on the decline, generally you can look at that stock as a little bit more bullish. When average true ranges are on the rise, you generally look at that stock as a little more bearish. Take a look at the last pullback here in Micron. What's gone on with the average true range? Well, we've had a pretty sharp pullback in Micron, but the average true range really hasn't increased all that much. The average true range has kind of stayed pretty stable. We haven't gone into, some crazy average true range area. So that tells me what? That tells me, we can see a bullish reversal come on into play. And look, there are going to be individual days where, this thing, fine, the average true range is going to go up today. Why? The stock's moving outside of its range. But generally, what you're going to see with these watch list stocks is what the overall trend of the average true range is. And whether it's on the rise or whether it's on the decline. It's not going to be a, ooh, what's it doing this minute type of a thing. It's going to be a bigger picture type of view. But generally, if the average true range is on the decline, you want to be looking for buy opportunities. When the average true range is on the rise, you want to be looking for sell opportunities. And it's that simple, right? There are most stocks model better with the ATR than does Micron. Micron's kind of an aberration there. The SPY models very well with the ATR. In fact, the ATR started on the rise when? Right back here in October. And what's going on with the market since? Right, it's been on the decline. We've had the ATR drop over the last week. What's going on with the market? The market's gone up. You can say, well, the market's still moving a ton. You're right, it is still moving a ton, but its average true range is fallen from 65 points a day down to 60 points a day. Right? It's still a monster range, just absolute monster range here on the S&P right now. So the average true range is a very nice way to kind of look and to say, hey, is the overall trend more likely to be positive or negative? What can I expect in terms of movement? Right now, with this average true range, you're going to expect big moves in the stock, or in this case in the SPY, and a 20-point movement back here is going to be very different than a 20-point move right where we are right now. So that's the average true range, and just giving that general tendency. And if you're looking to play a bullish trend on a stock, you want to see the average true range on the decline. The next one is the 3/7 stochastics. This is one of my favorites, and always has been. And this is something where and I'm putting in 39.1, and here we go with it. Sorry, I typed in 3.7 in the description. It's 39 here, but whether you use a 39 or a 37, you're going to get pretty much the same reads. But the bottom line is that when the 37 stochastics or the 39 stochastics is above 50, generally that stock's bullish. When it's below 50, generally it's bearish. And it gets oversold and overbought, right? Doesn't get as oversold and overbought as the regular stochastics, but this is a very kind of midterm type of look, and this is one where we don't see crosses happening all the time. This isn't happening over and over and over. I apologize. I just lost the screen there. But doesn't happen over and over. We don't see it whipsawing all the time. It doesn't, pull back just because the stock pulls back a little bit. But when we go and we look at an individual stock like a Micron, right? Is it in bear mode or bull mode on the 3/7 stochastics? Well, it's definitely in bear mode. But what has it done? It's come back up above 20. It's coming out of this oversold situation back above 20. So what do we know? We know that it's in bounce mode right now. It's not in bullish trend mode. Bullish trend mode doesn't happen when the stochastics is below 50. You go back and look historically, we're not talking about big bad bullish trends when the Stoch 39 is below 50. Right here at the end of October, that wasn't a big bad bullish trend. That was a bounce, right? And so this tells us what? This tells us, hey, right now, Micron, it's in a bounce situation. It's not a big bad bullish trend. If we go and we look at something like a Nike, for instance, right? This one here just recently went back above 50. Now, just because it goes above 50 doesn't mean it has to stay above it. But right now, can I look at Nike and say, you know what? The chances of a big bad bullish trend are greater than Micron? Yeah, absolutely. It's in a technical position with this 39.1 that is much more, where the odds are much greater in my favor of seeing an upward trend rather than just a small bounce. We go take a look at Apple, right? Where's it at? Well, it's still below 20. Are we talking about a big bad bullish trend emerging right here? Is it going to happen today, tomorrow? No, it's a bounce, right? It's an absolute bounce. That's all it is. That's all we can claim that it is. And, it could bounce and bounce up here to 168, 170, and it's still going to be in that bounce area, right? And so the 39.1, you're going to see it. You're going to see it. You're going to see it with every single stock and where it is. But the bottom line is above 50, the probability of a trend increases dramatically, of an upward trend increases dramatically. Below 50, the probability of a downward trend increases dramatically. And, it is pretty nice for overbought and oversold. Generally when the Stoch is down here at minus 20, generally it doesn't keep continuing to go down. In this case, it has. But when it gets above minus or above 80, generally, it doesn't continue to go up, but you can see with Apple, it has defied that, but there's just those general tendencies associated here with it. This isn't something where I look and go, wow, it moved from below 50 to above 50 today, so I'm going to go buy it just based on that. But a lot of times when that happens, there are other signals that kind of come into play. So it's a really good kind of indicator, especially if you don't want to watch a stock too closely on your list. You see it go above 50 on a day, you go, okay, I could probably go examine this a little bit closer, maybe make a little bit more out of this than what I have here of late. We go take a look at something like oil. What are we talking about? This is a bounce, right? This is a bounce with the Stoch here below minus 20. And can it bounce? Oh yeah, it can bounce. It can bounce pretty strong because of how oversold that it sits here right now. But a Caterpillar, for instance, right? It hasn't gone back below minus 20. That's one of the really interesting things about CAT compared to other stocks. You have Apple that's been well below 20. This thing has stayed above 20. It pushed above 50 briefly, broke down below it very quickly. But this is one that we could start to see emerge back above 50 in a similar way that it did right back here in August. And you can see after it went above 50 here in August, were the sell days gone? No, they weren't gone. But, the path of least resistance was certainly higher. And there are some stocks like Caterpillar that are getting closer to being back above 50 here on the stochastics. Adobe getting close, not quite there. Microsoft, it's getting closer, not quite there. All right. So that's stochastics. And then the third one that I wanted to show you here, because I don't want to inundate you with all 12 all at once, but is the point and figure chart. And a point and figure chart is a very simple chart. It is a chart where they draw X's and O's. And when the stock's going up, they draw X's. When it's going down, they draw O's. Very simple. But in order to draw or put an X in here, you basically need the stock to go up by the range of the scale, right? And in order to now reverse that and go down, you need to have 3 O's, or 3 ranges of it going down. I'm not going to get into all the intricacies of a point and figure chart. There's tons of education on that in here. You can just come down here and read up all on it. But what I do want to focus on here when it comes to a point and figure chart is that every single point and figure chart has either a bullish or a bearish pattern associated to it. Now, I'm not going to be using stock charts dailies. I use their hourlies, okay, here with them. And you can see this is double top breakout, December 28th. Okay. What is this? It's in a bullish mode right here, okay? That can switch, from day to day, can switch, relatively quickly. But on this hourly chart, it doesn't switch all that much, right? In fact, here's the hourly chart, and it goes all the way back to January of last year. So this is just showing 1 year's action, okay? Time doesn't matter with this. All that matters is price action. It doesn't put another plot every single day or something like that. But you're going to see that, okay, this stock has a bullish point and figure pattern. This one has a bearish point and figure pattern, and that be tracked. And one of the things that you'll notice is that there is a clear pattern out there. That when the average true range is on the decline, when the Stoch 39 is above 50, and the point and figure chart is bullish, the stock tends to go up over time. When all 3 of them are bearish, the stock tends to go down over time. It's not going to get you anywhere with, where's the stock going tomorrow in the next hour or anything. But in terms of just understanding the path of least resistance for that stock, these 3 factors put together are phenomenal. Now, you're going to see me add some other factors here to it and whatnot, because I think there's just a little more that can be done. And when I go and analyze things, I definitely take a look at a few other things. But these are the top 3. These are the 3 where, man, if you have all 3 of these lined up in your direction, chances are you're going to be right. Maybe not tomorrow, maybe not the next day, but over time, chances are pretty strong that you're going to be right. Thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.